Hey everybody, welcome back to my next series of videos where I'll be showing basic accounting. If this is successful, in the future there'll be a series of videos for intermediate and advanced accounting as well. I should clarify there are many types of accounting. It includes governmental, nonprofit, international, etc. These videos I'll be working on with this series will start with what most people would call normal for-profit business accounting. Other series will cover governmental and more obscure forms of accounting later. The first step in learning about accounting is what an accountant is and who uses the information provided by the accountant. From the Webster's Online Dictionary, the definition of accounting is the theory and system of setting up, maintaining and auditing the books of a firm, the art of analyzing the financial position and operating results of business house from a study of its sales, purchases, overhead, etc. And this is distinguished from bookkeeping. In order to accomplish this, a set of guidelines has been established. These guidelines are called Generally Accepted Accounting Principles, or GAAP for short. Many institutions, especially governmental or any businesses that is under a regulatory review, must follow these standards. There are different variations of GAAP. The United States and some other portions of the world operate under what is called US GAAP, whereas most of Europe and a good chunk of the remaining part of the world utilize what is called International Financial Reporting Standards. The International Financial Reporting Standards, used by more than 110 countries, does have some key differences from U.S. Generally Accepted Accounting Principles. At the conceptual level, IFRS is considered more of a principles-based accounting standard, in contrast to U.S. GAAP, which is considered more of a rules-based. In the future, I'll have a video out of the actual differences between IFRS and GAAP, but that was just kind of a general idea of the difference. GAAP is developed by the Financial Accounting Standards Board in the U.S., while IFRS, which is the International Financial Reporting Standards, is developed by the International Accounting Standards Boards in Europe. There's a convergence happening that both organizations realize with the globalization of the economies that they kind of have to put everybody on the same footing. So right now the two boards are kind of working together to kind of merge into one overall set of accounting standards worldwide. Now, the next thing we want to cover is the difference between bookkeeping and accounting. Bookkeeping generally involves day-to-day recording of business transactions for a company. It is the nuts and bolts of recording all transactions. Accounting functions at a higher level. An accountant will usually set up the books that a bookkeeper uses. They usually supervise bookkeepers in larger companies and prepare the financial statements and tax reports that are due. It should be noted that while bookkeepers' work is more routine, the duties between the two positions do cross over, and a lot of times it's not clear to tell who's performing a duty. Is it a bookkeeper or is it an accountant? The primary purpose of accounting is to provide financial information to the major users of accounting information. These users include owners, managers, creditors, and governmental agencies. Owners, well, of course, they're the ones that have invested money or other resources into the business. They are dependent on information regarding the company's earnings and all other financial information important in maintaining their investment. The next step are managers. They're the ones who prepare the financial reports. They need to understand the accounting data contained in the report in order to properly prepare these reports, and in addition, they need the information to evaluate performance of their business and meet their goals. The third group are creditors. They're banks and other sources of money or assets such as suppliers and vendors who extend credit to the company for the purchase of assets or to help pay other debts. Creditors are interested in the firm's ability to pay its debts. The fourth one is the governmental agencies. Taxing authorities and other regulatory agencies need to verify companies' financial information to ensure they meet regulations or pay the correct taxes. An accountant has many choices of profession. Here are a few general categories. It should be noted there are dozens of variations of each of these categories. Being an accountant is actually a lot broader field than most realize. The first area is public accounting. Most public accountants are certified public accountants. CPAs design accounting systems, prepare tax returns, provide financial advice about business operations, and audit financial statements. Many CPAs work for large public accounting firms or sometimes for their own smaller businesses. It should be noted, however, that CPAs can be employed by corporations in the private sector, governmental agencies, nonprofits, and a lot of internal auditors have their certification as well. Managerial or private accounting. Most people who are accountants are employed by private business organizations. These accountants, not necessarily CPAs, manage the accounting system, prepare budgets, determine costs of products, and provide financial information for managers and owners. The next area is governmental and not-for-profit accounting. Not-for-profit accounting is used by government agencies, hospitals, churches, and schools. Accountants for these organizations prepare budgets and maintain records of revenues and expenses. Local, state, and federal government bodies employ vast numbers of people for accounting positions. Internal auditing, there's another area. The demand for internal auditors has increased due to regulations with the fall of corporations such as Enron at the turn of the century. Internal auditors verify the effectiveness of an organization's accounting system and control. They examine and ensure that the company's financial information is accurate and protected. Internal auditors also ensure that the organizations are following government regulations and corporate policies. Finally, I will wrap up this session on the subject of ethics. In response to various large-scale corporate account frauds, such as Enron and WorldCom, the Sarbanes-Oxley Act established a wide range of new rules related to the audit environment and internal controls. The specific rules will be covered in a future video, but integrity and honesty are key to the ethics. Well, that's it for today's quick video. That's just kind of an introduction of accounting. I'll see you next time when we talk about business transactions.